Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. This is the cryptocurrency market Elliott wave update with Jason Appel. We'll get started here shortly. Just want to see if someone can type into the chat box here. Can you see my screen and hear me? I should be seeing an Ethereum chart on the 1 day time frame. Great, I'm getting a bunch of positive responses there. Yes. Okay, great. Then I'm going to wait just a minute here. We have a few more people coming in, and we'll begin. I plan to take about an hour for the webinar or so, give or take. I don't have it scripted out per se, but we're going to take a look at Bitcoin and Ethereum. We'll concentrate on those primarily, and then we can take a look at a few of the altcoins that we track, that Ryan and I track in our cryptocurrency service. We do allow our participants, for those of you who are unfamiliar with the service, participants can request charts, but these that I will present are ones that are demonstrating really solid patterns, demonstrating a better likelihood for a positive outcome, rather than those that just get pops and then sort of fizzle out over time. So, okay, great. It looks like most people are here, so we're going to begin. I want to take a look broadly to give some context for where we are in Bitcoin, in the bigger market here. This is my bigger degree view on Bitcoin. I'll give a little bit of a background here in Elliott Wave, especially there are probably some of you here who are not as familiar with the Elliott Wave theory, of which I'm a practitioner. Elliott Wave theory is a type of technical analysis, and in simple terms, the theory is that markets trend in 5 wave movements and make their corrections of the preceding trending movements in 3 wave movements. And what we tend to see in terms of 5 wave movements has an implication for various some specific Fibonacci extensions, which we can take a look at, that we want to establish at a minimum. But for example, when we're looking at a 5 wave move that we're tracking to the upside, the trend in Bitcoin longer term is clearly up. What we're looking for, I'll measure this off to the left here so it's more visible. What we do is we take a measurement of the initial 5 wave movement here. We have 5 waves. If we're zoomed into a smaller degree here, you can see we can count this as a 1, 2, 3, 4, and 5 wave move that has an impulsive shape to it. That's a type of 5 wave move that we identify. And what we do is we measure the length of that 5 wave move and extend that measurement upwards from the wave to completion. And our expectations are, for example, that we want to see the 3rd wave reach at least the 1.382 extension for a more appropriate 3rd wave in an impulsive structure. In this case, we certainly broke well above that, so I have no issue with this count, at least up until the 3rd wave, but we can discuss some of the nuances here. So again, the bigger degree view here is that we formed a larger degree top at the end of 2017 and spent 1 year in the primary 4th wave that completed at December of 2018 and have been in a bull market since then. We had an initial 5 wave move for our wave 1 that established that we had started the primary 5th wave, or circle 5, and price pulled back very strongly into the sort of COVID lows, along with sort of the de-risking and liquidation across asset classes in March of 2020. And then, though we did not have a great initial rally and price consolidated sort of back at the standard retrace zone of what we would have wanted to see for a 2, we broke out strongly then at the end of 2020 and in 2021 up into the springtime highs. So from there, we've really been in a larger degree correction here at this point. This is quite protracted, considering that we've been in roughly a year and a half at this point here. So this is really sort of one of the longer corrections we've had in terms of in terms of duration. In terms of the magnitude of the pullback, when we look at Bitcoin's history, this is not unusual here to see. I mean, what have we gone to from the highs here? We've gone from 69,000 down beneath 20,000 there. We're talking about something like about a 70% retrace or so. We've had several of those in the history of Bitcoin, and each time they've happened, there's plenty of people who say, Bitcoin is a scam, and it's not coming back, and it's dead now, and each time it's revived and pushed on to new highs. I don't see anything in terms of a bigger scale, both in terms of fundamentals or in terms of technical breakdowns here that make me a skeptic, or that warrant, I think, any larger skepticism around Bitcoin continuing up to another major high. So off of the 2018 low, we have what really counts best as 3 waves up into that low, into the high here. We did make a higher high in November of 2021 over above what we saw in the springtime, and we have a couple of issues here. First, it's not a clear 5-wave movement into that high. Second, though it did produce a higher high, this is really quite muted for a 4th and 5th wave relative to the rest of the structure. This is not impossible, and at a certain point we would be compelled to consider this as the primary count here, where we've completed a larger degree, as I'm showing in red, and are in a bigger degree pullback. For now, I am still favoring here what I'm showing in the black count, and the red is an alternative, hence these labels showing alt here. So let's take a look at that, and we can drill down into a smaller time frame. I will show that where we have pulled back to in terms of the pullback into June of this year has already sort of defied some of our expectations, and we'll show what we did get incorrect. The 1, 2, 3, that all played out pretty nicely, in particular from the breakout last year. Once we got up above 12K and pulled back and then broke out, this was a pretty smooth sailing with a nice retrace into January and February lows that gave us really good opportunity to trade for size for the end of this 3rd wave here. What we were looking for, though, however, was that this was, I'm going to change the degree here. What we were looking for was that this was just the initial wave 1 of a bigger intermediate 3. Again, when you're dealing with Elliott wave, it's a form of fractal analysis. We have 5 waves up in the 1, 3 waves in the wave 2. You can see there that's our initial wave, our corrective of that initial wave, and then a final leg down. We call that an ABC pullback in Elliott wave terminology. And that's what we tend to see for corrective waves, these clear 3-wave movements. So we have an initial 5-wave movement here, a really brief pullback, and then we really believe that this counted best just as the wave 3, and this counted nicely as a wave 4, and then we were looking for a wave 5 to take price up to well north of 100,000, ideally 140,000 plus, just for the intermediate 3, then to pull back in an intermediate 4, and then to get much higher intermediate 5th wave. That clearly has not played out. This path that I'm showing here did not take shape whatsoever. So we are already in our first alternative here, and that is that price topped in an intermediate 3rd and is pulling back in an intermediate 4th, and our intermediate 5th can take us up to that bigger 1.382 extension for the cycle 3rd wave here before we get a much larger pullback in the cycle 4. So let's take a look at how we would establish some confirmation that we have a low in place for this potential intermediate wave 4, and what happens if we continue to retrace lower in terms of larger degree expectations. Okay, so one thing of note is when we're dealing with an impulsive structure, we want to see the wave 4 maintain above the point. Take that off of there. We want to see price maintain above the 50% retracement of the wave 3. So whether you're going to call this the top of wave 3, I don't prefer that, but in either case here, we can see a brief spike and reverse below this 50% level here, but any sustained break below or a meaningful break below really challenges the thesis. And also notice that we have the top of wave 1 coming in not too far below that 50% level. If price overlaps with the wave 1, that becomes problematic as well because it would break the rules of the impulse. So as per this chart, it really varies, from exchange to exchange. This is sort of an aggregate index for Bitcoin that I'm looking at here. But if price were to overlap into that June 2019 territory, we would have a problem there to consider another higher high. It's still possible, considering this entire move from the 2018 low as a diagonal, but considering the rest of the structure and that this has 5 waves and 3 waves and then another 5 waves, it really is not favored for price to break below this. And if we do have overlap into that region, the red count here that I'm showing becomes quite a bit more likely. And there's a couple of ways to view this. Ryan and I have showed here the prospect that we still are in a bigger wave 4. What the thesis really is this: if we break below this 13,000 level, we have to take much more seriously the prospect that we're in this wave 4. Now, there's a couple of ways to express that. One could be that we still topped in this circle 3 in 2017, and that we had an initial A wave down, and though we made a substantially higher high, doing so only in what counts best as 3 waves would allow us to count this as a B wave top here, and now coming down in a wider C of 4. If that's the case, we could get down much deeper here, and price could really retest the A wave low of 2018. I do not favor that prospect. It's not just that I don't like it. It doesn't fit with a lot of the other things we're seeing across crypto. That said, I'm not keen on ruling that out as a possibility. What I think is more likely, if we do overlap with this, rather if we have a major high in place, which is a reasonable perspective considering the depth and duration of the pullback we've seen off of last year's high, I'm more keen on saying that we topped here in the primary 3rd wave and are in a bigger primary 4th wave. So for example, it would look like this. We would have 1, 2, this would be 3, 4, and this would be 5. And then this would be 1, 2, 3, 4, and 5. And we would have a very muted 5th there for that intermediate, for that minor 5 of intermediate 3. So if that's the case here, we are looking for a bigger pullback in the 4th wave. So we will go back to the bottom of the primary 2. And we'll note that wave 4s typically retrace within an impulse to the 0.382 retrace of wave 3. Again, our bigger level that we don't want to see breached is the 50%. That would be down here around 57.50 or so. But really this 0.382 here around 10K becomes sort of the interesting level. If that is the case, my expectation would look something more like this here, that we've bottomed in a potential A wave, are bouncing in a B wave, and then we'll come down in the C wave here to that 10,000 region. So the key thing that we want to be watching for, I'm going to take some of these smaller labels off of the chart here, is if we are in this red count here that I'm showing, price is, we have to watch out for essentially a B wave of resistance here. So we'll zoom in on the smaller degree charts right now to look at these two different contexts, and then we can move on to a couple of the Ether and then some of the altcoin charts here. And again, if you have any questions, please feel free to type them into the chat box. I will try to get to as many of them as possible within reason, depending on how many we have, but definitely we'll try to get to those here. I do want to say that generally, if we are following the red count, we want to view that as our alternative, but if that's what we're following, we want to track our B wave resistance. And generally, I would say that we can find B wave resistance between 30,000 and 50,000 here. I'll put this in red. That's our 0.382 retrace to 0.764 retrace. Typically, we see B waves in a wave 4 come up a little bit higher, maybe to the 0.500 or 0.618, but certainly would not want to rule out the prospect of getting a shallower B wave and be caught flat-footed. A key thing to know in terms of Elliott wave here now is that if we are bottoming in a wave 4, we want to see impulsive activity on the way up. That means we want to see price take shape resolutely, we want the action to be resolutely bullish. That means that we have bigger up movements and smaller retraces to the downside, and really in terms of structure, not just in terms of the expanses, the extensions and the retracements, but we want to see a 5-wave move. In either case, it's reasonable that price will come up into this region here, but the question is, how do we get here? If we rally in something like this, a 1, 2, 3, 4, and 5 into this region, we get a clear 5-wave structure. That is going to be more favorable for continuation upwards. Again, if we see something, it would be labeled at this smaller, minute degree, that would look like a good 5-wave move for a minor degree 1 of intermediate 5. So we'd have something like that, and then that, and so on. And this is what I'm talking about with the fractal here. So with what we want to see is a 5-wave move to fill out a minor degree wave 1, and that would be minor degree wave 1 of a bigger intermediate 5. So seeing what I have labeled here in the circle count, a 5-wave move into this region, is what those who are bullishly inclined want to see. If you're bearishly inclined, what you would be more so expecting would be a 3-wave move into this region. So that would be like so, where you'd get an A, B, and C up. Like that. And that would be a little bit more concerning. If we get 3 waves into this region and then fail to hold support for a prospective 4th wave, that is going to be looking more like this red count here. Again, the black count is what I'm tracking as primary, but it's got to prove itself at every step of the way. And again, if we get a more corrective move or a more 3-wave overlapping move into this resistance region, that's going to have us on the lookout for potentially de-risking some holdings and looking to purchase back in the 10,000 region there. Okay, so let's take a look at the smaller degree chart on Bitcoin. So off of the high, what we have is the primary here. Again, I'm going to put my alt. We have an A and a B and a C. We have our high in April. We have the A wave down, a B wave up, and now we have 3 waves into the June low. And unlike Ether and some of the other altcoins, we have this pretty sloppy, pretty overlapping bounce here into the August high and a deep pullback from the August high relative to the rally into the August high. We retraced nearly 100% of this, and this is very much unlike Ether and some of the altcoins here. And so ideally what we would have is a slightly lower low to finish this structure here, to give us more confidence to have a clear 5-wave move down. Unfortunately, what we're dealing with here on the micro action now opens up the prospect to considering a potentially truncated low here. I'm not, I generally am not a fan of such things. It does happen. Anything can happen in markets. What we're doing here with Elliott Wave is by no means prescriptive. The market does not have to follow our labels, and very much of the time does not. This is used as a probabilistic prediction here based on sets of if and then. So we make assumptions about a bigger count, and we have a rubric that upcoming actions should follow to validate or to reduce the probability of that thesis. Okay, so my concern with the depth of this retracement here is that we have an initial A wave down, and we are working on something like this, where we have an A, B, and C up. Again, a three-wave move, and that would be just as the initial A wave of the bigger parentheses B So this here is the concern, essentially, that we get a three-wave move up, pull back in three waves, and then get a five-wave move up. Again, C waves are five-wave movements, but overall, obviously, this circle A, B, C is three waves for that A, a pullback in B, and then a rally in C. So this is my concern at this point with price making a very deep retrace and not making a lower low. If we were to make a lower low, I have no problem calling this, for example, if price fails from here and comes down to the 16,000 region for a slightly lower low, I have no problem then calling that the intermediate fourth wave completing. Again, subject to seeing some bullish, seeing a bounce and seeing price, start to rally upwards, of course. But in this case here, this is very problematic in terms of what we're seeing structurally here. And so Bitcoin is one chart, and of course, it's the biggest chart in crypto. Over the years, we have tended to see that whatever Bitcoin does, the market tends to follow, maybe to a greater or lesser degree in various bullish and bearish cycles. But it is concerning here that when we see so Ether and some of the altcoins having tremendous rallies and Bitcoin not following through, it does give me a reminder of what we saw. I think it was in spring of 2018. We had this type of move here. So off of the February low in 2018, we got a nice initial bounce, but then a very deep retrace, and we had what looked in terms of shape, this looked like an impulsive rally here, but which clearly sold off. We were unable to hold this higher low here from the February low. What we saw in altcoins, I believe we saw this in Ether between February. So in Bitcoin, price made a higher low in April and then got 5 up and then failed. When we look at the larger degree on Ether, zooming back to that, you can see we have a different structure here. In April, we made a substantially lower low here, and then we got what looked like a very good 5-wave move, but all prices followed the Bitcoin chart, meaning that where we were in Bitcoin here, we had the lower low, a rally, a deep retrace, and then this just being a corrective bounce given that we were unable to follow through. When we glance over at the Ether chart, we had the lower low here. We had really what looked good as a bottom considering that lower low, but then price followed the Bitcoin chart considering that Bitcoin only had a 3-wave rally right back into sort of the center of this consolidation region before, really sort of mainly consolidating throughout 2018, but doing so with lower highs and lower lows along the way before finally breaking down strongly around November, Thanksgiving into the December low. So it's something to watch out for here. It's certainly not ideal that Bitcoin is not coming along for the bullish ride off of the June lows. So that's something that I see sort of concerning. Okay, question: do you see it as bullish that Bitcoin is maintained over 19K and now overtaken 21K and seems to be holding? we can take a look at that. It, it is somewhat bullish in terms of a shorter time horizon here. Again, what I've been presenting thus far is really sort of broad strokes, and we will drill into the smaller time frame to see how the more local action fits into the larger degree structures. Okay, question. It's weird seeing crypto and alts relative strength. Do you think that they can continue to decouple from a big SPX bear market in wave four? Ryan and I were discussing this this past week. It, certainly from the March 2020 low into the spring 2021 highs, Bitcoin definitely has been more highly correlated with equities than it has at various points in its history. This in particular, the general direction of this and getting a top around April and then a bigger top around November, sort of has some similarity to the Russell small cap and to the Nasdaq charts, less so I would say to the S&P chart. And it is nice to see generally crypto uncoupling. I don't think by any means that whatever sort of shorter term correlations or even correlations we've seen for the last couple of years that that there's any requirement that they persist. I know plenty of people are saying based on that we have had correlation that crypto is absolutely a risk asset and to be treated similarly to equities at this point. I don't. I'm skeptical of that thesis, and would tend to want to watch the chart based on its own movements and judge it on that basis. That said, I am willing to compare charts across cryptocurrency across the entire asset class, but I'm less keen on thinking that it has to be involved with the S&P 500's movements. And so certainly, on that basis, I'm happy to see that we are getting some divergence between equities and crypto. So okay. Let's see. Bitcoin has come to here's a question. Bitcoin has come to just below 23.6% for wave four, circle one on the 1-day BTC chart. Is there a good probability that we are in the circle four? I would say it's a reasonable probability. It's certainly not one that I would want to write off again. So this question is about, are we in this bigger primary four that I'm showing here? And again, there's a couple ways to get here, as I showed. One can be that we're in a high B wave and then heading down in the C of four. I'm not as keen on that. I think we will see a bounce of sorts into the end of the year and to early next year. And really, I can tell you that while I favor a bottom being in place, given the depth of this retrace here, this is much too deep for a confident intermediate wave four. Sorry, this black parentheses 4 based on the rest of the structure. And so I can't say, that I'm 70-30 or 80-20 or some really highly confident, that I have some really highly confident prospect here that, we are going to head up to my target 140,000 more directly without any substantially lower lows, essentially that we're going to avert this red count. I still would slightly favor the black count, but it's contingent at this point, given the depth of this. It's really dependent on how we rally into this region. If we rally up into this region in a 5-wave movement and then hold support and take out the high, I get much more confident about the prospect of getting this 140,000, at least getting a higher high, ideally upwards of 100,000. There's different analysts who have different targets here. I'm looking for north of 142,000 for our next major high, and we can see quite a bit above that. I wouldn't say that I think we're going to get all the way up to 950,000, but when I look at the smaller degree, I can make a case for, or sorry, the intermediate degree, I can make a case for 140,000 target, potentially up to 280,000 or so. But we'll take these one step at a time to be sure. Conversely, if we get 3 waves into this region here, I will become much more cautious and start to favor this prospective red count here, especially if we are then to break support at any point for the impulse up. So at this point, there's really not much we can afford in terms of breaking larger degree support if we are going to head up directly higher. Now, At a bigger degree, if we do break down in this red count here, generally speaking, the 6,500 to 10,000 region becomes very interesting, for longer term longs. And what it would be suggestive of at that point is that, while we've topped here between the bigger 1.236 and 1.382 for the wave 3, if our wave 4 is holding the 0.382, or even if we all the way come down to the bigger 1.0 upside extension, then we're talking about an absolutely massive move here that can take us up to 950,000 or north of that at the completion of this cycle degree fourth wave. So again, I see that there's light at the end of the rainbow here, sort of either way. The question of is how much longer. Sorry, I made a malapropism there. There's light at the end of the tunnel here, either way. But the question is, how much longer might we be mired in this correction? It is concerning at this point that this pullback, being a year and a half, has expanded in time beyond what we saw from the December high. That piece of evidence on its own does go in the camp of the red count here. But again, when we're doing Elliott wave, this is primarily price analysis. And the biggest thing that has us looking for one more high is when we look at this move off of the 2018 low. This really counts much better as 3 waves up inside of a larger impulse. And so it doesn't make sense for us to have topped in 3 waves. Again, we could look at this as a 5th wave, and if we are forced to, we will. But it's quite muted in terms of that being the most highly likely perspective here. So given the 3-wave structure and that we have not overlapped into wave 1 territory, technically speaking, we haven't even broken beneath support. We are still very much within wave 4 territory. It's just very protracted in price. Again, this 15,985 level is the key level as the 50% retrace. We can see a spike through that and then reverse. But if we overlap into wave 1, even for a little bit, that becomes very concerning. But that is dealing with the perspective of the prospective lower low potential there. Okay, question here. How does the longer-term BTC chart fit in with Avi's multi-year greater depression scenario? I sort of reject the question on the basis of it. It doesn't have to fit into any scenario here. If we want to look, even if we are to say that Bitcoin's movements will continue to follow that of equities more or less, I don't have an opinion about that. I don't believe. I would say I'm skeptical of that opinion. But even if we are to follow that, it's possible that when we're dealing with the SPX, that when we bottom in a larger A wave, so say for example that we follow the red count in Bitcoin, that we could finish off a bigger ABC, and that then while Bitcoin is headed up in its 5th wave, S&P is just headed up in a B wave, and so they're both headed north, but Bitcoin massively outperforms and gets to far higher highs. Again, at that point, I'm looking at least to 140,000, but potentially up to 950,000, as totally insane as that sounds. But again, just because the S&P may be mired in a longer-term correction, even if we are to follow directionally those movements in Bitcoin, we can see substantial outperformance to the upside, where perhaps the S&P just retraces some of the movement from the all-time high in a larger year or 2 year long corrective bounce, and Bitcoin screams to higher highs. So okay. Question, how do we now know that red A is finished and red B is started? Very good question. So first off, we don't know. We're going to take a look at the smaller time frame to look at that. If we get a lower low here more directly, again, that can still be an A wave and it can be a wave 4. However, if we do get the lower low, especially if we don't make any sustained break below 15,985, if we don't overlap into the wave 1, I'll be more happy to favor the black count than where it's bottoming in a wave 4 than I am now. Right now is more concerning on the basis of price getting a deep retracement, which has this move off of the June low look more like a corrective rally in Bitcoin, unlike some of the other crypto charts. So let's zoom into a smaller time frame here. Again, what I'm showing here in the black count, we have an A wave down, what looks to me like a B wave up, and we have 1, 2, 3 down, a wave 4 up, and then a fifth wave down, but that is not looking complete as of yet because we need a low, we ideally want a lower low here. And that references that. And so we're going to zoom into the small time frame here. And so I have a couple of different perspectives, but if we are in the fifth wave down, as I am showing that in the black count here, that would be we bottomed in circle 3 in June. We have a wave 4 rally. We have an A wave down and a B wave up and a C wave down for the initial A wave. Again, we're tracking this entire bigger sea of 4 as an ending diagonal. That means each of these motive waves, those advancing price pulling price downwards in the direction, the general direction of the C wave, are 3 wave movements. So we have 3 waves into this low. We have a corrective rally. We have a low that formed on what really looks like 3 waves here. And so what I'm looking for at this point, I can potentially consider 5 up complete here off of this B wave low. And we've retraced a substantial portion of this parentheses A wave. If price now breaks below this 20,000 region, makes a meaningful break below that, that is going to favor to me a more directly lower low here down to the 16,000 region as per the black count. Okay, but if price is able to hold here, meaning if price is able to get a pullback into 20,000 to 20,500, I would say this is our general support region here. We can look at the retracements off of the wave 2. Again, our 50% here is right at 20,015, and so if we see a sustained break below this low that was struck Thursday of last week, if we see a meaningful break below this, that is going to favor more so what I'm tracking in black, and that would favor price heading to a lower low. It doesn't have to take us to a lower low, but it starts to favor that as that becomes too low for this perspective, smaller degree fourth wave. If we hold this fourth wave and then get a fifth wave up, that can be our wave 1 there at that point. But the question then is, what is that a wave 1 of? If we hold support for a wave 2 and then take out the high of that, that proves that. But the question then, in terms of what that may look like. So let's say that price comes down into support and then gives us the higher high up to 22K for the fifth wave up, as I'm showing in the more immediately bullish green perspective here. That would be our wave 1. We'd expect price probably to pull back to about this region in the wave 2. And then we would be looking for a 5 wave move up to the 30,000 region here. My concern about that is when we look back at, well, here I'll just show it on the bigger degree, is what we could have there in that case is we have our A wave up, our B wave down, and that then we are getting a bigger C wave up here. And that would be like so, where we have 1 of C, 2 of C, 3 of C, 4 of C, and 5 of C. So that's of concern at the larger degree. So what we're going to want is, if we do get a 5 wave move up into this region, we'll want to see price hold support once again for a corrective retrace and then take out that high. That is going to be the issue the entire way, is can price hold corrective retraces? Because otherwise we have what I'm looking for here. Oh, sorry. How is this going to look? I'm off by a degree in this perspective here. So this would be rather our A wave, and then this would be our wave 1. So if we get 5 up into the 30,000 region here, that's concerning that this is potentially just an A wave, and then we're pulling back in a bigger B wave, and then can head up in C, and then really break down later next year. In either case here, I would say, you know, my perspective is more or less bullish. And in terms of the micro level here, I'm going to zoom back in again. The key thing we're watching here on the smaller time frame is this 20,000 region as support. So we have let's say 20,100 to 20,500 is our support. If we hold this, I'm confident, I have more confidence that that price will continue to rally up for the next several weeks here. So we can get the fourth, and then we get the fifth up, and then we want to see price hold support for a 2. Once we take out the high of that 1, that gives us much more confidence then at that point that we're probably going up another 50% from, you know, this 20,000 support region up to the 30 to 35,000 region. At that point, we're questioning, are we heading up in the red count or the black count? And we'll be doing another one of these webinars at this point. So, you know. Yes, I'm going to take a look at some of the miners. We will take a look at Marathon in particular. Let's take a look over at Ethereum here. Okay, so at the bigger degree Ethereum chart here, don't have the cleanest perspective off of, you know, from inception here, but I think what looks best on this chart is the following, that we had 5 up into the June 2016 high, we had a wave 2 pullback, we had our wave 3 into the 1.382 extension in January of 2018, we got a deep primary 4 into December of 2018, and are working on a very protracted 5th wave higher here. And, you know, while the timing of this structure is certainly sort of awkward here, looking at the bigger degree that, you know, we have this 3-wave move into 2018, we have a wave 4 pullback, and now we have a clear 3 waves off of the December 18 pullback. So really we're looking for the 5th wave higher here, and on the basis of where we've come so far, I would like to see at a minimum the 6,300 level struck for the 5th wave, but on the basis of the move off of the December low, not impossible that, you know, we come all the way up to the 2.0 extension at around 16,000 there. So let us see how we might get to those levels there. We can take a look at that. I'm going to take a look at the smaller time frame chart here first. So we have really what counts best as 5 waves up off of the June low of this year. We have 1, 2, 3, 4, 5 up. Now, with 5 up, we could consider that potentially an A wave or a wave 1. And my concern is if I consider that a wave 1, actually, let's review the smaller degree chart. We have 5 waves up and 3 wave pullback, and now we have another 5 wave move. That very strongly bodes well for continuation upwards. That is that's sort of ideal structurally for upside continuation. So the Ethereum chart makes a strong case for upside continuation. And in terms of, you know, an easier chart for more medium term or swing trading, the Ethereum chart is certainly in much better shape generally at this point than the Bitcoin chart. Coming back and zooming out, given that we have, I'm going to come into the daily, we have this initial move into the August high, which counts as 5 waves. If I were to call this the wave 1 here, and this 3-wave pullback the wave 2, which looks reasonably good, it projects up right into that 6,300 level. See, it's almost perfect confluence there. When we have a 1-2 setup, it typically is our standard target for it is the 1.764 to 2.0 extension. Again, we can see extensions higher, but so I'm questioning in ETH, is this our 1-2 and we're going to get a muted intermediate 5th wave here that only comes up so not terribly much higher than the intermediate 3rd wave here. So this is certainly a reasonable structure, and how it would take shape is that we have our 1-2. Now we have a micro 5 waves up off of the October low, and so we would be looking for something like this then. We'd have a 1 of 3, 2 of 3, So we'd be looking for 1, 2, 3 up. Sorry, we have a 1, 2, 1, 2 setup at this point, and so this next support, and we'll drill down on that on a smaller time scale because this is going to be sort of our next best buying opportunity is in the very near term, probably this week or next, buying this wave 2 pullback, trading for this third wave here is can be a pretty massive move to the upside. But this is sort of the simplest prospect here for Ether is that we're targeting the 6,300 region here. That's my minimum target. What I'm showing as a potential alternative here is that our initial move up is just an A wave, and this is a B wave, and now we're working on a C wave here of a bigger wave 1. I'm going to put this in purple here. And that will form an ending diagonal so that we would have a 1, a deeper 2, a 3, a 4 that overlaps with 1, and a 5th higher. That can take price further up into this region here. So that's something I'm tracking as well. At least from a trading perspective, at this point, both are similar in the sense that really at this point we're looking for, so long as support holds, we're looking for a bigger move up to minimally 2,700, potentially back up to the former all-time highs in a bigger wave 3. So I'm more keen on tracking the black count here. Let's look at the micro count. Again, so we have 5 waves up, and I am going to change the labeling on that here. More keen on just following the standard impulse. One of the things also that is a feature of crypto is more so than other asset classes, we often see some fairly large extensions. And so it's possible that rather than just coming up to the 2.0 extension here, based on the move off of the June low that has perfect confluence with the bigger 1.764, it's possible that we see some bigger extensions in this minor 3, 4, and 5 that could take price all the way up to this next fib here in the 16,000 region. So generally, my bigger degree target here on ETH is like so. And one possibility also is, Bitcoin and Ether do not have to follow each other. So, we could get 5 up here into this region to complete this, while Bitcoin, let's say, just gets maybe a higher B wave, something maybe more up to 50,000 or something, and then they both come down together. That's certainly a possibility that I would be watching, but I'm definitely more keen in terms of risk taking on ETH to the upside here, given its structure off the lows. Again, considering we have 5 up, 3 wave pullback, and now we have another micro 5 waves up. I would like to see maybe one more micro higher high here in the 5th, but below 1557, and I will consider that we are in this wave 2 already, as I'm showing here in the red count here. So we are going to call this the top for all intents and purposes. And again, we have a really good structure here into this. We can see a clear 1, 2, 3, 4, and 5 wave move. I'm going to switch the degrees on that. So now we have price pulling back in our wave 2. And based on where we've struck as a high, probably look at that as the high here. It's a very muted 5th wave. We're looking at this region as support here, generally. 1350 to 1465. So this is a region I definitely will look to be buying in. I might even start layering in some more cash into where this 4th wave bottomed here. Put that in blue. Yeah, so below we're getting down to this level below 1557. I'm going to consider a top in wave 1 in place here, at which point we can start looking at retracements. And I would say this region 1350 to 1505 is support for the 2, and expectations are from that point, zooming out here again, that we are looking for the following: wave 1, wave 2, and now we have a 1-2 setup inside of the third wave. Yeah, again, I'm looking for this circle 3 here. Even if we're in that bigger ABC that I was showing, my expectation is that we can reach at least 2700 here, so long as this bigger support zone holds. Again, I'm just going to point out setups. I never know what's going to happen with any of these things here. I'm confident that we can see some pretty sustained upside from this, but we will need support to hold. At this point, this perspective that I'm showing here in black, where we have a bigger 1-2 and now a smaller 1-2 forming, is valid unless price breaks below 1190, the mid-October low. But really here what I'm looking at is this 1250 level. If we break below that, that really reduces confidence. Ideally, we want to see 1350 hold and no break below that. We want to see price come right into this 1350 to 1505 or 1510 region, and then bounce out of this to the upside here in this path shown here. Yeah, and then this ideally can take price, potentially back up to all-time highs here on Ether. So quite a bullish structure there. But I would say when we talk about probabilities, the highest likelihood portion of the move here that we want to be tracking is supposing that we hold support here in this 2, this move up to 2700 to 3350, that is the highest likelihood portion of the move here. That's sort of the meat of the move. And you're talking about something that's probably in excess of 2x there in sort of shorter time. So that is a very excellent setup on ETH. All right, we're going to take a look at a couple of alts. We're not going to go through everything here, but I will show you. We're going to look at AAVE. We're going to look at Binance. We will look at Matic. Those are, and we will also look at CHZ. Those are the ones that I've been most bullish on for the last few months. I wrote an article about the first 3 I mentioned a couple of months ago showing the setups in those. So we're going to take a look at those here. And we will bring those in. Okay, so when we look at, I'm going to open up a larger degree chart here actually on AAVE. So 1 second. Okay. All right, so at the larger degree on AAVE, shrink this down so it fits in our frame here. Okay, we have a very nice impulsive structure here. We have our initial 1-2, and then we have a very clear 1, 2, 3, 4, 5 in our wave 3. And in terms of larger support, you can see here from the bottom of our 2 to the top of our 3, our wave 4, we have a low right into the 0.382 retracement of the wave 3 at the June low. We have really what counts best as a 5-wave move off of that low and a 3-wave pullback. This has the similar structure to ETH here, where I'm questioning, is this a smaller wave 1, 2, or are we getting a bigger wave one that's still in progress here? But this is generally the path we're looking for. And I would say, my minimum target here is a new all-time high, but I would really like to see price get up to the 2000 region here, which is a substantial rally on AAVE here at this point here. I would say my minimum target here is the 880 region, and more ideally up to 2000. I know that sounds quite outlandish here, but we have a very nice setup here. What we have is a 5-wave move off of the June low into the August high. That can be counted as 5 waves, a clear 3-wave pullback, and now we have another little 5-wave move up off of the recent October lows here. So we can zoom in on that. And again, I'm going to move towards the bigger structure that I'm counting in ETH for these. And that would put us in a okay, so what we're looking for here, minimally, I'll put the ABC in purple, A, B, and C. Okay, so we have 5 waves up, a 3-wave pullback, and now off of this October low, we have another little micro 5-wave movement here. AAVE is looking really good so long as price remains above 65 here, the October low. And this is one that we called the support level on, and price bottomed right into that support region and played out really nicely. And you can see we have a 1, 2, 3, 4, and 5-wave move for AAVE. And it's come up right into our sort of ideal zone here to the 0.382. So at this point, our support is 75 to 84, and we're getting pretty close here. And that would open up a potential long opportunity. That's a potential long setup, 75 to 83. And whether we're headed up as the ABC here, I'm looking for, or the black count, I'm looking for a minimum, a move up to the 160 region here. So again, we're talking about a 2x move there on AVE, which looks phenomenal. Next, we will take a look at Binance. Okay, again, bigger degree here for context. Okay, in Binance, we have a very large 1-2-1-2, and we are in the bigger intermediate third still, or we're working on a larger ABC up. Both portend price getting all the way up to this bigger 1.0 extension here. So that's quite a substantial move from where we are. That's another sort of almost 10x we're talking about there. And this is the general path I'm looking for here, shown in black. And this can take us out several years in time here. Binance is sort of a bit different structurally from a lot of the other coins. That's the bigger perspective on it, though. And what we have here off of the June low appears to be a larger leading diagonal forming for the minute degree wave 1. So that's that circle 1 there, of the minor degree 5 of intermediate, or parentheses 3. So coming back to the smaller degree here, our support at this point, and price is following along really splendidly. Okay, in this case, we have a 3-wave move up into the August high, clearly corrective pullback, and now we have a rally into the 0.500 extension in 5 waves. This looks like we're going to be taking shape as a diagonal. So we can pull back, and our next support is going to be in this region here between 318 and 290 here is our support, and that should set up a rally minimally to 400 region and potentially all the way up to 460 to 540. We have a question when we're dealing with diagonals in terms of how they subdivide. Is this all of this subminuet A of minuet 3, or is it just the A of the A? If it's this, and I don't have a really clear perspective on that, we can see a much bigger extension in the C up here, at least reaching the 468 level, but more ideally the 540 region. So again, what we're looking for in Binance generally is a test of support, 290 up to 318 for the B wave here, and then for a C wave higher to come. I have no issues with the Binance chart. As long as it's above 255, this view is valid. In terms of where we might be concerned is if price were to break below. I would say our first concern is a break below 284, and more concerning would be a break below 263. Break below 263 strongly suggests that we are getting a deeper wave too. Bigger picture in terms of where we are structurally off of the June low. So long as price is above 220, I have no issues trading to the long side here, and have quite a bullish outlook on this chart. So shorter term, immediate support is 290 to 318. No problem so long as price does not make any sustained break below 284. And if we break below 284, it opens up the possibility of breaking below the October low and getting a deeper wave 2 into the 240 region. And below there, if we see a sustained break below 215, this becomes problematic. Otherwise, looking upwards, at least to 468, but more ideally up to 540. Don't know exactly the micro path we will take from there, but generally looking for this support region to hold and then take price up higher. Next, we will take a look at Matic. That's Polygon. Take a look and see if any of you have any questions. We'll look at alternatives in Ethereum here. Okay, we have a question. Micro, does it look like third of C right now? Debbie, if you could be more specific as to which chart you're talking about, I'm happy to take a look at it, but I don't know. Someone named Debbie asked the question. It says, on the micro, does it look like third of C now? If you could please let us know which chart you're referring to, I'd be happy to take a look. Okay, Matic. Matic is definitely one of our best performers since the June low. Really has rallied phenomenally since that low. But zooming out to the bigger perspective here on Matic, we are working on a larger 5-wave move from the March 2020 low. I have an intermediate 1, 2, and then 1, 2, 3, 4, 5 for the third. Though price did make a higher high here in Matic into the December high, I'm really keen on calling this a B wave. This really looks more like a 3-wave structure. And then we have a very clear, very perfect 5-wave move down in Matic from the December high into the June low. Since the December low, we have an initial rally that took price well above resistance here, but really looked like only 3 waves. And so at this point, I'm favoring a higher high in Matic. I'm looking for ideally the 420 region at a minimum. 482 is sort of the official target here. We can see big extensions up to 14. I don't really favor that, though. I think we're more likely looking for a move into this 480 to 786 region. And this really looks like sort of a textbook diagonal where We have 3 waves up for our wave 1, 3 waves for a wave 2. Now we're breaking out above that high, and we're looking for a move up in the A of 3. So really similar structure here in terms of what we were looking at on Binance. And it's possible that our A has topped. We'll look at where micro support is here generally. And the time horizon in terms of price reaching, this target is much shorter on Matic than it is on Binance here. This, Binance is sort of in its own world as far as the wave degrees are concerned in terms of how it's playing along with other charts. So our support is a retrace support for this move from the September low here is 88 up to 109. So as long as this region holds and we don't see a break below 77, expectation is that price is going to rally up here, minimum to 172, but ideally we'll see extension in terms of our bigger third wave all the way up north of $3 here. So phenomenal setup. And again, it is also possible here that we are seeing something like this take shape when I quoted the smaller or the shorter end of the target here. That price is just coming up to 172, and that will take more of this path rather than this path. So one of these two paths appear reasonably likely, and that is favored so long as price is over 77. Support for any possible add-ons or entries is ideally in this zone here. That would be 88 to 102. Possible that we just see a shallower retrace down to 109. Really in accord with the August high, but this chart's looking really strong in that it's obviously resoundingly broken above its August highs here, whereas Bitcoin is sitting closer to its June lows. So Matic is one chart that's really outperforming. I do want to take a look at some charts that have a bigger degree. Actually, we'll look at one more. We'll look at CHZ. And our bigger degree structure on CHZ, we have 1, 2, 3 waves up into the high. We have a really protracted pullback, but we did hold support into the June lows for a wave 4. And from here now, we have a couple of different potentials. Zoom in. Again, we have a clear, just textbook 5-wave move off of the June low into the September high. We have an initial pullback. Possible that that's just an A and we're coming up in a B and a wider C wave here. At this point, though, with price breaking out above the September high, I'm really in favor of the blue count here. And in the blue count, what this looks more like is that we have 3 waves up and we need another 4 or 5 to complete the bigger minuet wave 1 of 3. So our retrace support at this point, coming back to CHZ, let me shrink down the chart there. Okay, so let's move that off to the left. You can see it more clearly. Okay, so we have a move up into the 1.764. This is a pretty extended third wave here. Nothing unusual about that. And it puts our bigger fourth wave support in this zone here. So we're looking between 23.7 cents, 0.237 up to, could even put retrace support all the way up here up to 26 cents. And so long as that region holds, I have no issue with this blue count here. And this then would, getting one more high would put us in the same position as we currently are in ETH, where what we're looking for here, we have 5 waves up, a 3-wave pullback for wave 2. If we get another 5 waves up, then we have that 1-2-1-2 setup, and that's really where we expect to see price really take off from here. So I am going to move this over, put all this in black as the primary count. And this is an A, B, and C in purple, Alt 2. Okay. So what we need for a really confident bullish setup here is price to hold this micro support down to 23 cents. A break below 22 cents becomes problematic for that perspective, but as long as we're above that mid 22 cents region, getting a higher high is reasonably likely. Then we have that 1-2-1-2 setup forming, and at that point we're looking for substantially higher highs here. Our wave 3 of 3 should take price all the way up to 75 cents. Wave 4 can pull back to around 42 cents, and wave 5 of 3 can take us up north of $1. And again, that's just for our wave 3, and then we get one more 4-5 upwards of $2 here into our bigger target region. So I think this is one of our best looking altcoin charts here for the near term, along with these others that I've shared. I'm pretty bullish on all these. Matic looks great in terms of its price movement. In terms of structure, it's not ideal. CHZ is maybe one of the more ideal ones in terms of structure, and AAVE is quite nice as well in terms of structure. So those are ones I'm sort of more active in personally. Okay, we are going to take a look at, quickly we will take a look at, I want to look at one chart that is more bearish short term, significantly more bearish just in the short run. Okay, so when we look at chain link, I am still looking for a higher high here, where we have a 1-2, a wave 3 into the May high of last year, and price is still holding wave 4 support so long as we stay above this 290 level. In terms of the move off of the high, we had an initial A wave down, a B wave rally, and then we have 3 waves into the May low here, and we have, this is sort of a textbook triangle, an Elliott wave triangle, where we have converging pattern here. We have the A wave, a B wave, the C made a lower high than the A wave, the D made a higher low than the B wave, and now we have our E wave, and we're turning down from resistance. So in this case, what's ideal here is, so long as price remains below the August high, we can see a pretty substantial downdraft here towards a lower low. A lower low, as per the bigger structure, targets sub $4 here. We're up at $8 right now. So Link is one of these charts that in the shorter term, I'm definitely biased more bearish. Without having a 5-wave move off of this high yet, I'm not terribly inclined to call this potential short trade, but we do have a potential impulse down forming like so. If we get like this, if the structure fills out more or less like that, that can set up a 1, 2, and then we can see some really substantial downside in the 3, 4, 5 here, like so. So not all the charts are, like, for example, if we do get that more immediately lower low in Bitcoin, coming back to that, where was the Bitcoin chart that we're looking at? For example, if we head down resoundingly below 20,000 here in Bitcoin, this is one of these charts that I would say is more sensitive towards a very strong pullback, whereas, in ETH, we may just see a slighter pullback from 1,500 down to the 1,350 region. In Link, we can talk about a potential that, we're going from over 8 to under 4 in a deeper pullback. So, and again, these don't have to take place in the same time frame, but this is the perspective so long as price is remaining below that August low, and ideally now below the low struck this weekend here yesterday. We want to see price continue downwards, form 5 waves for this parentheses 1, and then we can see, you know, something like this develop that I'm showing here as a general pathway. Okay, any questions on any of these charts? Okay, does it look like the third of C now in AAVE or B and B? No, it does not. So AAVE really looks clearly, even if we're getting this purple count that I'm showing here, really looks like we're in a wave 2. This is potentially a smaller degree wave 2 of this C, but I see this as a bigger wave 2 pullback here. So on AVE, we're looking for 75 to 84 as our general support. And on BNB, where did my BNB chart go here? Here we go. On BNB, I see us in a B wave pullback here. It's possible that if we are in a third wave of sorts, that we are in a third wave within this A wave, and that we're taking a price pattern more up directly to this 0.764. With this little pullback overnight, you know, if we immediately reverse upwards, I can look at it this way. But let me see here where the micro support is on AVE, or sorry, on Binance Coin. Okay, with Binance, yeah, I'm really going to want to see this level hold here. What is that? 315. Below 315, I really cannot call this still in the A wave here, but it is possible where price is right now to consider this perspective that we're working on a 1, 2, 3, 4, and 5 wave A wave here. That is a possible path if we see price, you know, turn up from this region here. That could then take us directly up to the 400 to 410 region, and then we'd pull back in the B wave and then get the C up to 540. Yeah. So that's a good question. Okay, I see someone said AVE spiked down to 77 cents. I don't see that on the Binance chart. Maybe that's occurring on another chart here. When I look at I don't see that on Coinbase. I don't see that really on. Oh, I see it on Kraken. Kraken does get these sort of liquidity spikes, in particular in some of the altcoins here. So it's possible that, you know, wave 2 has bottomed already in the most bullish sense. I don't favor that. You know, again, yeah, this occurred inside of a single minute here. We have just maybe a big liquidation of some sort, and that's not reproducible on any other crypto chart. Yeah, none of the other ones show any sort of spike down to 77 there. Okay. Question, how much money does it take to trade each contract of AAVE? Well, I'm talking about these not as contracts, but actually just as buying, you know, AVE as the token. And so, you know, currently AVE's trading 87.39. Unless you're finding some exchange that's letting you trade those on margin, you're not dealing in contracts here. You're going to pay $87.30 at the market price right now of US dollars for those. Okay, question. What is the alternative count for ETH in the 4-hour chart? Okay, so let's look at Ether here. If this setup fails on ETH, one thing we can consider here, if price breaks down below 1250 and then below 1190, our next area of interest is this wave 2, this circle wave 2 of minor degree wave 1 bottom here. I don't know why that's not locking into there we go. So 1,000. So we have a couple of potentials here. I don't have these all listed because I don't see these as high confidence, but we can talk about these, for example, here. On this 4-hour chart, if this 5 wave move that we see off of the October low breaks down, we can consider a potentially an alt 2 still in progress, where we have Again, I do not favor this at all, especially that we have a really clean 5 up, but it would look something like this, like I'm showing here in purple. And if we break below 1,000, that is suggestive of coming to retest and break this intermediate wave 4, which would bring us down into the 650 to 730 region for a deeper wave 4 there. So if we really see massive breakdown, like if Bitcoin breaks down to 15,000 and the alts just all tank with it, which the link chart is certainly suggestive of, but I'm not seeing that across the space. This is the most sort of bearish that I'm seeing in Ether here, that price would come back down to the 670 to 660 to 750 region, but we need to break a lot of support. We haven't even really validated that we have a top in place yet for the 1. We need to break below 1557 for that to indicate that we're likely in wave 2, to indicate that's breaking down, and that price is going to invalidate this potential 5 up off the October low. We need to break below 1250, and then ultimately obviously below the October low, at which point then we're still looking for just a bigger 2 down to probably about the 1140 to 1060 to 1140 region. And if we break below 1,000, then I'm looking down here. So that's a very alternative prospect at this point on Ethereum, and I think Ethereum looks quite bullish. I'm going to take a look at a couple of miners here. Generally speaking, in the past week or two, miners have not fared well. I'm going to look at Mara. This is one that has generally looked a little bit better off of the June lows this year. We do have a potential 5-wave move off of the July low, and we are more or less holding support at the bigger degree here. Our bigger support, the 618, is down to this 850 region here. And so we had the A wave low into the end of September, 3 waves up into the B wave, and now we are breaking down in C. In terms of the subwaves there, in terms of marathon, I favor us as needing another low in 3 and then one more 4-5 that can take us down to 850. It is possible that one more low completes this, and our confirmation of sorts that a low is in place. Well, again, considering that our B wave did not retrace past the high of 1, I really, really want to see our C wave make a lower low below the A wave low here. I really would like to see this get down to this region, down to 850 at a minimum beneath the September lows here, to be confident about that, because otherwise we are concerned about that corrective structure, sort of like we pointed out in Bitcoin initially here. So definitely looking downwards on this point, and at this point, price really should stay below this little what time? This is on the wrong time zone. Oh no, yeah, this little spike here up. I want to see price remain below 1215. So long as price is below 1215, I want to see this structure fill out for the C of 2, can take us down beneath. Where was the A wave low? Okay, the A wave low is here around 936. So I would like to see price get below 9, and ideally we can come down and test in the area of this 618 retracement region. As far as other miners, we did have, well, it's not a miner, but a crypto stock of sorts. We did have a very nice setup in Silvergate. That's SI as the ticker, but that totally invalidated. At this point, I can't say that I'm terribly bullish about any of the stocks in the crypto space here. There's nothing that looks extraordinarily attractive, and so I'm not keen on going through a bunch of charts and talking about why they don't look good. If they do set up more nicely, we can take a look at those. For those of you who are on the service, we're updating all of these charts that we're going through. Get multiple updates throughout the week. The crypto stocks get frequently updated throughout the week, and you're able to make any requests for us to take a look at charts. Over time, we'll tend to not want to look at charts that don't have attractive longer term setups, and everyone starts to learn what those are. But I will say, in the bull runs, we've done quite well. In 2021 last year, we had some very excellent runs, even in coins that have totally fallen apart. I think we had a 10x in Solana. We even had a 10x in Luna, and we're out of that well before any of the shenanigans of that blew up. Again, taking this technical approach here that we do allows us, reasonably good indication of risk and reward. In terms of levels of support and resistance that we identify, and really helps us to see good trade setups, where we can take out bigger moves, with great confidence, and not just be, sort of throwing stuff at a wall and seeing what sticks, and having 100x returns, while the rest of our coins really go to nothing. So, okay, I have a request for. Oh, okay, we have a question. Where can Mara go after the wave 2 low? Great question. So in terms of our bigger perspective here, my minimum perspective in Mara is that we have, rather than a wave 1, that we're working on an ABC up here. That would be aligned with that ABC up that I was showing in Bitcoin as a potential. So for example, in Mara, if we're dealing with a bigger A and now B wave, even if we're dealing with the bigger B wave here in Mara, that's what we're talking about at this point. Take these fib lines off of here. So what we're looking for at this point, minimally, is what I'm showing in the ABC. I'm going to make the assumption for this that price comes down and forms a near-term bottom around the 618 retrace here. That's at 851. Okay, that would be suggestive of minimally a C wave up to 30. Whereas if we get this impulsive structure that I'm showing in black, we're talking about coming back up to the all-time high, and price getting north of 100 here. Price can come up to at least 82, but potentially north of 100, 112. But that would be in the impulsive count. If we're looking at what I'm showing here correctively in red, I'm looking, back around the $30 region here. So that's quite a big trade here if you're layering in, and you're getting entries around 850 and getting out at 30. That's massive. Will continue to favor upside here, so long as price remains above 680. Any break below 685, and I think we will retest this late June, early July low and likely break it. We don't have a very good sort of setup at the larger degree, but I do like this at the smaller degree, at least for this ABC up that I'm showing in red. And again, if we do come down deeper than 850, for example, if we come all the way down to 7, then we're looking more so up to just 25 or so. It really depends on the depth of this, but I do think we can see a substantially higher high than we saw in August, in a bigger, even in the red count here, so upwards of 25, I would say is reasonable for the CFB, even in the less bullish perspective. So great. Okay. Oh, I will take a look at, I got a request about Metis, and that is one that we do look at in our service. That's one that we have been a little bit more bullish about. It's one I'm a little bit less confident about. The reason being, we have an initial 5-wave move from the August 2021 low into the January high of this year. This really counts nicely as 5 waves up, and really counts nicely as 3 waves down. And from that low, we now have a 5-wave up. My concern is that we have seen this with so many charts where they make an initial 5 up, and they retrace to standard retrace support. They get a little bit of a bounce and then fizzle out. And so I would say that there is certainly some caution that should be warranted with the Metis chart. But again, given that we have a good 5 waves up, a 3-wave pullback, and now a bounce of sorts, I would say at this point what we're looking for in Metis, I still want to see a little bit higher for a more complete parentheses wave 1 of the circle 3 here. I do believe we're a little bit shy of that. But the key level at this point is the low struck in mid-October. Below that, and we can get a lower circle too, but given the depth of the retrace already that we saw into October, that becomes pretty concerning as a thesis. So yeah, where do we come down to? We came down to the 618. I guess I could allow for a lower low down to the 764 down to 1850, but obviously if we are to break below the June low here, I don't see any good reason to be long this chart, at least from a technical perspective. Yeah, so if you're trading this one here, really I don't see any confident bullish perspective if price is to break below this June low. And quite frankly, I really would want to see at this point price holding above the October low, but we don't really have a confident indication that we have struck a low there. So I could allow for a slightly lower low as I'm showing here in purple beneath this October for a deeper circle too, but really would want to see that hold $18. And again, if we break below 1360, I don't see any reasonable setup here. And minimally, again, even if we are dealing with what I've been showing across the charts in red here of an ABC up for the potential of a bigger B wave here, I think we can see substantially higher. The measured move right now, where the length of C equals the length of A, is up around 77, 78 bucks here. So again, this is pretty good risk to reward on this chart. I like it from that perspective. I structurally has some smaller issues that I'm a little bit more concerned about, as I've mentioned here. But certainly if you're not trading this too big and managing risk here, I think this is a decent one to take a look at. So, okay, I think that just about covers it here for everything that we wanted to cover for this webinar. I really thank everybody for attending. Doji. Doji is one that we are looking at in the service, and if you're in the service, I can either on Elliott Wave Trader or on our crypto waves on Seeking Alpha. You're welcome to request that tomorrow, and I can take a look at that. Again, for those of you who are on the service, Ryan will be gone tomorrow, and I will be managing both rooms. And for those of you who aren't, I hope this is of interest to you. I hope it's interesting enough to potentially join and sign up for it. I have links on my Twitter page. And for those of you who are in the Elliott Wave or Seeking Alpha room, you already know where to find us, whether or not you're on Seeking Alpha or Elliott Wave. So thank you everybody for attending, and good luck in your crypto trading. Should be doing another one of these probably before year's end, and hope to see many of you there. Thank you so much.